Good morning friends and welcome to the pre-market view. US markets were flat to marginally negative. In fact, the jobless claim data that came out, 75,000 odd, was the slowest pace of decline in the jobless claim. So the market was not very sure about what the repercussions could be, particularly on the tapering. And now that the jobless data is not so good, some people are expecting that the tapering pace could be a bit slow, and which is why we saw some drop in the 10-year bond yields, which actually came down to about 2.85% versus around 2.95 that we have seen in the past few days. European markets too were up about 0.5 to almost about 0.75%. No major data point from Eurozone. And when we look at the Asian markets today morning, Nikkei is shut today, so no cues coming out from Japanese markets. But Hang Seng actually is weakening. In fact, it started off on a good note. It was up almost about 0.5%, but in the last about half an hour of trade, we are seeing some kind of a negative tick on the Hang Seng markets, and SGX Nifty is suggesting that we are going to open up about 20 to 25 odd points. Back home on Friday, our own markets were quite tricky. We had extremely good set of numbers coming out from Infosys, and the fact that the guidance was revised upwards definitely had a positive bias or rub-off on most of the IT stocks. So Infosys was up almost about 2.5–3%. HCL Tech, TCS, Wipro, all the IT stocks were strong, but at the same time we had seen a huge negative breadth for the markets. The mid-cap as a sector underperformed big time, and banks, infrastructure, and most of the other metal packs were down. So overall, at the index level, we are not seeing any great kind of a clarity, but sector-specific moves, particularly IT and pharma, continues to remain in the limelight. In terms of flows, friends, FIs were net biased in the cash market to the tune of almost about 18 crore. In the index futures, they were biased to the tune of about 149 crore, and the domestic institutions were also biased in the cash market to the tune of about 40 odd crore. On that note, let me invite Sadhana to take us through important F&O cues and ideas that we can have from the F&O side.
Good morning friends, let's have a view on derivatives. On Friday's session, we have seen that in spite of good numbers released by Infosys, markets continue to trade volatile and finally snapped the session with a marginal loss of 0.10%. In this period, we have seen that marginal short positions built up by market participants, as around 0.66 lakh shares were added in open interest, and Nifty cost of carry decreased significantly by 55%. On the options front, we have seen that PCR has decreased from 0.92 to 0.91, indicating call option has added more number of shares than put option. If we see 6,200 put option as well as call option has seen a good number of activity in open interest front, whereas 6,100 put option has seen a good number of activity, and 6,300 call strike have seen a good number of activity. We have seen that some additions has taken place in the strike of 6,400 call option. Our intraday support would be 6185 and 6165, resistance would be 6220, 6245, and there is no security in ban period today. On Friday session, FIs were net buyers of approximately 400 crores in future and option segment. Overall, bias for the market is negative as we are trading below our weekly VWAP of 6,200. Our high range would be 6,200 and lower range would be 6,075. We expect market to remain choppy with negative bias. Thank you.
Here are the important news and events that we are tracking today. First of all, friends, the CPI data for the month of December is going to be out post-market, and the expectations are that it's going to be about 10.12% versus about 11.24% that it reported last time. Though there's going to be a decline month on month, but the fact that it remains at a very high level of 10% may not be a great positive news for the rate sensitive pack as a whole. Also, the results which are going to be out today, CMC, we are looking at a net profit of about 68.4 crore. The entire IT pack is in the limelight. So CMC being a quality mid cap, there's a lot of positive bias around that stock. And Exide Industries, we are looking at a net profit of about 127 crore. The November industrial production data that came out was a shocker as it fell almost about 2.1% against the market expectations of a positive 0.8% kind of a data. And this was led primarily by the decline in the consumer durables. So definitely this would be a bit of a negative, but because of the negative growth that we are seeing after a couple of months also, the RBI may not really go ahead with the rate hike. So that's the only positive takeaway as far as the IIP is concerned. NELP, about 46 blocks which were taken away from Reliance and Kane would be put back in auction. So this is something that the entire oil and gas sector could remain in a bit of a limelight. Reliance Industries and its partner BP have managed to avert a possible shutdown of the KG-D6 gas fields after they got long delayed approvals to take the remedial action in that. So this is a bit of a positive for Reliance. For oil and gas, the positive news is that there is a notification for the new natural gas pricing guidelines, which would be for all local gas output. So this particular new price would be available at about $7 to $8 per MMBTU, which is definitely a big positive for Reliance. So one can go long there with a stop loss of 841 and a target of about 884 to about 900. And ONGC again, one can go long with a stop loss of 278 and a target of about 293 to about 298. Tata Motors, positive news as the yearly sales that they've reported is about 4,25,000, which is a record highest number that they've reported. So one can go long on Tata Motors with a stop loss of 360 and a target of about 378 to 385. That's it from all of us, friends. Have a great trading session and see you tomorrow at the same time.